What's up, guys? It's John Crutch. Welcome to Home Talk with John. Again, I'm your host, John Crutch with Coldwell Banker Shakora Advantage. I am here in the office of Guild Mortgage, thankfully to This is Blair Anderson from Guild Mortgage in Myrtle Beach.
Yes.
And this is Adam Janis from Blue Nova Home Inspections. So this is going to be our first of 4 quarterly sessions. Have different people on the show each time, or might have a mix of the same as well. So the purpose of this is to invite you all to ask questions, and when we don't have people watching, like right now, we're going to be just having sort of a little jam session, talking to each other about steps to think about when starting to buy a home. Welcome. If you're joining us on the broadcast, feel free to type in questions as we go, but we're going to go ahead and jump in to get started. So, like I was saying, the first thing is going to be talking about steps when buying a home. So things to think about. So, Blair, give us an update on what the market's doing right now in the mortgage world.
Market's very busy. As you guys have probably seen, interest rates are fluctuating wildly, which is a little uncomfortable in the short term, but they'll stabilize out and have done so in the past week. But to really answer your question more importantly, what do you do beforehand? I think one of the most important things you can do whenever you start to buy a home is to reach out to a lender to see what you can get pre-qualified or pre-approved for. So that's really the most important thing, is to know your purchasing power.
Absolutely, and I agree. That's a big thing, and there might be some real estate agents that decide to watch this later on too. For those of you that are missing the broadcast, you might be seeing this on YouTube, you might be seeing it on Facebook Live or Facebook Recorded After. But like Blair was saying, for real estate agents as well as clients, the first thing we do as agents, or what should be done, is vet our clients. And what I mean by that is making sure that they're actually capable of purchasing a home. And that's not a negative thing. That's just to make sure that everyone is on the same page, setting the communication guidelines going forward, making sure that they can afford the home they're looking for, because the worst thing that can happen is 2 things. The client's time gets wasted, and then the agent's time gets wasted. We don't want our clients to go out and waste their time and fall in love with a home and then find out, oh, they can't afford it, or really, maybe they could afford more.
Absolutely. That's a great point.
Absolutely. So what are rates doing right now?
Rates have gone up. Conventionally, you're looking anywhere from 4.75 to 5.125, just depending on your credit rating. And that's a misnomer anymore. There are many more factors, like your loan to value, your credit score, your debt to income ratio. There are a lot of factors that determine rate. So whenever you hear rate across the board, it's not that way. Okay. Everybody's situation is as unique as the house they're buying.
And get into that a little bit. Give us an example.
So you can have 2 different borrowers, and one borrower can have a rate of 5% because they have additional factors, lower credit scores, and you can have a different borrower, their interest rate be 4.75. And everybody just hears in the market, because there's a lot of published rates out there that don't have any credit score being driven. They're all priced out at 740 plus or even 760 plus. So it's really important that you get that pre-approval done, because then you know exactly what your rate's going to be, and you know exactly what your purchasing power can be.
Absolutely.
Big deal.
Okay. So that's a big thing. That's something that where, it could be 2 completely different situations based on credit, based on financial situation.
Absolutely.
Everything.
Absolutely.
So that's reiterating. We'll keep talking about it during the show, is that you have to make sure that you get pre-approved. And for instance, I just had a friend come up to me the other day, and it's something where we want you to be comfortable with the people you're working with during the time that we're going through this relationship. And it's not a short-term relationship by any means. I had someone come the other day, and they've got some dings on their credit, and I said, well, we need to get you in contact with a mortgage person so that you can start working towards your issues now and planning 6 months ahead, a year ahead, because guys like Blair and myself, this is something we do on a daily basis, year over year, month after month, week after week, to where we'll work with you long term, no matter what it takes to get you approved eventually.
And let me interject here, because I think that's a very important, when you're getting pre-approved and you haven't really started looking for the home yet, if you do have those dings you just mentioned, if you're not buying for 6 months, then we can work on your credit to get your credit scores up so your rate's lower, things of that nature. Very important. Very important.
Absolutely. So big thing with that is after we do that, that's when we can actually start the home search process. You can check out Guild Mortgage to check out, what's your website, Blair?
It's www.guildmortgage.com/Blair Anderson.
So that's GUILD mortgage, mortgage.com/Blair Anderson. Then you can check out my website, myrtlebeachdream.com, Myrtle Beach Dream. That way you can sort of, even before you start the pre-approval process, if you just want to browse and see what Myrtle Beach market is doing, you can always visit my website. Blair's on there as one of the recommended contacts for mortgage people. So is Adam for home inspectors. After we start that process, let's jump forward a little bit, and then we'll sort of shoot around some and say, okay, so whether it's a resale or new home, Adam,
Correct.
Tell us about home inspections a little bit.
Well, basically what we do is we're looking at the home as a system, or the major systems of the home. And we want to evaluate that and assess that and give the buyer a big picture of what's going on with that home, whether it's new or used construction. There's a lot of stuff out of the market, and every home is a little different when it starts coming to those systems. We evaluate everything from appliances to all mechanical components in the home. We look at the manufacture dates and kind of where they're at in their life expectancy. So same thing with the roof system. Everything has a lifespan, and being on the coast, there's always that factor. The closer you are to the ocean, the tendency of those life expectancies go down. It's
like an air conditioning system.
Right. Oceanfront, you might have 8 to 10 years, where if you're on the other side of the waterway, you might have 15 years. But there's a lot of different products out there, a lot of different manufacturers, so it all depends on those items coming into play. One thing we like to pride ourselves on is that we try to help the purchaser or the buyer with understanding what they have. So we'll include model numbers, data plate information. We run that through a national database, let them know what there's manufacturer defects or recalls on items. What's available. So sometimes that information is not available, but we try to give them the most information that they can possibly have. But what we've been running into, and especially with this market, is a lot of new construction. So we'll come in and look at a home right before it's getting that certificate of occupancy, or right after. And we don't do really a code compliance type of assessment. It's more of what's going on with it, or an extra set of eyes. So a lot of the builders welcome us to come in, even a lot of the, what we say, the big box builders like Lennar or DR Horton, or any of those types of builders, because these builders are busy as can be right now, and that extra set of eyes can just, we can find a lot of little things. And it's cosmetic or mechanical, or vice versa.
And that's a big thing, and I've seen it come up here lately as well, especially in certain areas where no matter who your realtor is, whether you're using myself or anybody else, I don't care what they tell you, if it's a new home, still strongly consider getting a home inspection. If it's something where you trust the person and you're not worried about it, and you want to save the, however much it might be, that's completely your call. But as a realtor, I'm always going to recommend you getting a home inspection regardless. So should your realtor, even if you're not using me. I'm telling you now, way in advance, whoever you decide to use, get a home inspection. It's a really good investment, whether it's new or resale. Now, about that,
right.
what do home inspections normally run? Based on square footage, or how do they do that?
Well, and before we go to that, just to say, for the buyer, or working for the buyer, but for the realtors, we're not trying to kill a deal. We're trying to educate the client, educate the realtors, and bring everybody into, an informative thought process about moving forward with the purchase. But we range our inspections based on square footage, type of structure, the layout, and the age of it. So, for example, a single family home built in 2000 on a concrete slab, under 2,000 square feet, they range about $350.
Okay.
And then we offer other services. So say we do a home out in Long where there's septic tanks involved and wells. We have different services for that as well. So, adding a septic tank inspection or doing well water testing. And that depends on what type of mortgage that buyer is going to get. VA loans, USDA, FHA, conventional mortgage. So sometimes like a FHA or a VA loan will require them to have well water tested and make sure the septic tank is inspected. But we can provide those services. So we have a little bit more of a general or broad background when it comes to the inspection process. So, we can usually cater those services to the clients.
Awesome. That's great, and that's a big thing too, because there's no such thing as a one size fits all home. So it makes sense that there's not a one size fits all inspection.
Right. And then, in this area, I mean, there's so many different types of single family homes, the condos, and multifamily, and elevated structures. So you really got to pay attention to detail when it comes to that.
Okay. And I'm glad, what he mentioned, a couple of things he mentioned, and this is a great spot for Blair as well, is he mentioned USDA, VA, these different types of loans. So USDA, of course, is United States Department of Agriculture. That's if you're going out more rural. Blair's educated me tell them about the line, Blair, sort of where in Horry County, where that line, sort of that invisible, really squiggly line fits.
Yeah, it's right where Clear Pond is. That I can't remember the name of the road.
That's Gardner Lacey?
Yep.
Right there. If you're going towards Coastal Carolina, basically where the Walmart CVS is for Coastal Carolina University, and the Clear Pond by Mungo Homes, west of there, and then up in Long.
But what's weird is there's some pockets right there too. So
oh, really?
Yeah, the USDA provides a website that we can type in the address.
Okay.
And I've had some pockets that appear to be uneligible or ineligible that are actually eligible. So it's so distinct that one side of the road sometimes will be eligible, the other side will not. So
interesting.
It's really just database driven based on the address.
So if there's anything you're looking at with a Conway address, Loris, Longs, Greensea, Nichols, Marion, places like that, always consider USDA, because it's a big fallacy right now, especially with the economic recession. For primary
residents.
Good. For primary residents. Big thing that came up during the recession is everybody thought, okay, well, I've got to have 20% down. They were cracking down on credit. They were cracking down on everything. However, USDA is 100%
correct
financing. So that means you could have zero down with a payment. Same with VA, which is a good segue into VA. VA, of course, is that for military veterans and active military, as well as sometimes retired military. With that said, I'm actually trained to work with USAA and Navy Federal Credit Union clients specifically when it comes to VA loans. So if you are USAA or Navy Fed, thank you and yours for your service. And there are some great benefits from working with Coldwell Banker specifically for those particular types of clients. You can get as much as $1,000 cash back on your closing. And that's just from the Coldwell Banker side. That's not including, what USAA or Navy Federal Credit Union gives you in general. Now, what does Guild do for VA? Do they do anything?
We can do same types of lender credits, and we do quite often. I mean, it's very common. I mean, we think very highly of our military and thank them for their service, and so would be more than honored to help them get in a home. And again, that's for primary as well.
Absolutely.
So we have a lot of people that think it can apply to second home purchases, and it's for primaries.
Right, and that's something big. It's down here in the Myrtle Beach market for anybody who watches this later, in secondary markets such as the Northeast or the Midwest, where we get a lot of feeder people coming into the Myrtle Beach area, as far south as Georgetown, as far north as Cherry Grove and Brunswick County, North Carolina. A lot of secondary homes, but a lot of these loan products, if you're doing a secondary home loan, so if you're doing a secondary home, you can finance as much as
90%.
90%, but more commonly, what are you seeing right now?
90%.
Really? Excellent. That's awesome.
Absolutely. Yeah, we see a lot. Because the reality is the majority of our clients are retirees.
Right.
If you think about it, they're coming down and purchasing a home. They want to do so while home prices are still pretty low and reasonable, and so they want to go ahead and secure their retirement home. And so what they do is they'll come down and they buy it as a second home, enjoy it for a few years prior to retirement, and then move down and turn it into their primary residence after they sell their home. So
that's awesome.
That's typically what we see, and that's the reason we see minimum down payment, because a lot of the equity is in their home up north. Their intention is to sell it at some point in the future, and they do that, but they don't have the funds now, so that's why they do that.
That's awesome. So for those of you joining us just now, this is Blair Anderson with Guild Mortgage. This is Adam Janis with Blue Nova Home Inspections, and I am John Crutch with Coldwell Banker Shakur Advantage. Thank you for watching Home Talk so far. Back over to Adam. So Adam, talking about the new homes versus resales, what are some the most common things, we'll start with resales, that you see that come up on the home inspection when resales? Top three.
Mechanical, HVAC,
that's a pretty high dollar item.
Yeah, that, roofing, and just interior wear and tear. Anywhere from appliances to windows. Windows seem to be a big issue. It just whether they're compromised from the integrity of the thermal part of it, where you start to see condensation or staining in the glass, or just old HVAC systems. And then, most of the homes now, we have a lot of vinyl siding and metal-clad fascia or wall trim. So a lot of the rotten wood, things like that, aren't such a big deal. But then we do have a lot of older inventory too, where you come into, you find a lot of deterioration and wall trim, wood, wall coverings and such like that. But then we have a lot of other homes that are a little more upscale with stucco. And stucco can be a real nuisance depending on
Especially with stuff on there.
right. One is about how it was applied, and then the age of it, because there's an era there where there was different types of foam used that are, I think, what they consider open cell, and they draw more moisture to the foam. So then you get moisture and heat, and everything dilapidates.
But stucco just starts falling off the big sheets, which you see in some older stucco homes.
Yeah. But there's a process to everything that we do. If we find that's like stucco's based in our general home inspection, but then if we do find issues, that's when we'll have to talk to the seller. It may be more invasive to do those assessments or something of that nature.
Now, something you were talking about a few minutes ago about how HVAC units close to the beach, especially the outside unit that you see with the condenser, the foils, the coil. I learned, and tell me if you've seen this too, oceanfront condos, a lot of them you see at the beach will be underneath, under the base level. The problem with that, when I was by the maintenance guy actually told me, is that the rain typically will rinse the salt off the coils, whereas if they're underneath the condo projects, the salt stays on the coil and wears it down faster.
Yeah, and I mean, it's apples and oranges when it starts to come to that. I mean, still, it's that salt air, constantly on those mechanical components, and things just deteriorate. You'll see things that are 5 years old that look like they're 15 to 20 years old.
Wow.
It just depends on the manufacturer and what location. A lot of things are on the roof with the condos, but then we see, gosh, I've seen brand new systems. It's just bad installation.
Right.
But we have a pretty broad background, like I was saying. We're through the Building Performance Institute and also another organization called ResNet. So we do a lot of performance code compliance certificates with builders, HVAC companies, and so we assess under the general home inspection. We'll do a general functionality test, but then we can come in and do a higher based performance or assessment on HVAC systems and looking for like leakage versus efficiency and things like that. So we do a lot of different types of inspections.
So how far into the HVAC can you as a home inspector actually go into and look before calling in a tech?
Right. We can't dismantle the equipment, so we'll do a general functionality test, but like then with natural gas, which is kind of newer to this area, and the furnaces, we'll take some of those components apart and look at the interior to make sure. But we look at combustion safety. We'll take carbon monoxide readings. We look for gas leaks, things that could be detrimental to those people moving in. You don't want anything to explode, or you don't want them to be poisoned with carbon monoxide gases. So there's a lot of different gauges and devices that we use through the inspection process. Now, as far as basic heat pump, we don't really dismantle that, but just from doing a general functionality test, like John Smith came in and turned the system on, you can tell a lot of what's going on with it. So
that's a big thing too, especially in your contract when you're buying a home. You have a specific section in there talking about home inspection. In 2017. The state of South Carolina actually enacted further on the due diligence laws. The good thing about due diligence versus home inspection of the contract is if you actually read the contract, which a lot of folks don't, as agents, sometimes even myself, we're guilty about not going over line by line with the client. We give it to the client, let them read it over before they sign it. Home inspection covers very specific parts of the home in terms of what you can back out because of. However, with due diligence gives you a period of time where you can actually, whether it's 5 days, 10 days, 15 days, whatever that period is, 10 to 15 is probably somewhere closer to where it needs to be based on a 35 to 45 day close. And with that time frame lets you back out for any reason whatsoever. So it's kind of an insurance policy. That depends on what you negotiate in there with your realtor. So with my clients, for instance, typically I'll say, listen, let's do due diligence clause if we're doing due diligence. And for $100, you can back out regardless. That gives you time for your home inspection. If you decide you want to go further and do an HVAC inspection, that gives you time for your CL100. It's a whole separate issue. Or any mold tests, radon tests, wherever you might be, you need them. We don't really have those down here as much. Lead-based paint tests, asbestos tests, and on and on. This gives you a period of time with due diligence addendum to do whatever you want to the home. And if you wake up one morning and have cold feet and you want to back out, you lose a minimal amount of money and you get your earnest money deposit back. So switching back over to Blair, talking about earnest money a little bit. So for the folks that are thinking about buying a home, when you're getting ready to purchase a home, costs you need to be considering. You're going to have, obviously, whatever your offer cost is, but not too many people think about what the offer is because most people want to know, what can I afford month to month?
Sure.
So what you do have to know is, okay, what my down payment is going to be. So is it going to be 0? Am I going to be VA? Am I going to be USDA or other products like that where I can get up to 100% financing? Or is it going to be FHA where it's 96.5% financing? Am I going to get 5% down, 10% down, or is it a secondary home where I could have as much as 25% down for a condo town?
Mm-hmm.
So with that said, something you have to think about is earnest money. Earnest money is a good faith deposit to where, and we'll have a jargon video later, but that's going to be where it's putting skin in the game, saying you're not just going to run away while this person has their home off the market. So typically that can be somewhere around 1% of the purchase price is sort of what I shoot for typically, maybe a little bit more than that. So on a $200,000 house, you could be looking at somewhere like $2,000 or so for your earnest money deposit that gets held by typically your realtor's company, or it can be held by the attorney's office. So you're going to have that, which is going to go towards your down payment or your closing costs. You're typically going to have somewhere around about 3% closing costs, give or take.
3% is probably a good percentage when you're down under 100,000.
Okay.
It's not so much as the price of the home goes up, the percentage goes down because a lot of those numbers are static. So they don't fluctuate with the cost of the house.
Okay.
They're just static cost. So,
Right.
Most of the time, people always ask me, well, is the earnest money part of the deal? Yes, it is. But let me give you a tip on earnest money. It's always important whenever you have your clients hopefully they're writing an earnest money check and not giving you a money order of something that cannot be sourced. A lot of times I will see someone that after the fact had no clue that they had given them an earnest money check that's a money order. Well, that can't be sourced. And if it can't be sourced, it can't be used. Now, their money is still in good hands, but it can't be part of the loan transaction. So that could cause an issue.
Interesting.
They might not have enough money to close.
Right.
If I have $2,000 cash in my pocket and I go get a money order and give it to you, yeah, that's good. It secures the deal. But for me, the lender, that's not a good thing because I can't source it. Or I've had friends write checks for their friend that's buying a house because they're on vacation with them because they forgot their checkbook.
Oh, wow.
It creates, there are a lot of situations. So always ask your lender if you're getting ready to accept that earnest money. We certainly don't want to hold the deal up. That's not what we want to do. But at the same time, at the end of the day, both of us want a happy client, right? And so we certainly don't want to say, well, we certainly wish you hadn't done that because now we can't use it. Now they're upset and we're having to get a gift from somebody else to try and make it work. It's just those little things. It always is the little things, right? It's not the big things. It's always the small details that, we're so anxious to get that deal going, for example, that we just missed that one little question. Where's this money? Are you going to write a check or, give me a small check if you can or do something.
So when purchasing a home, earnest money deposit, check,
Yes.
certified check.
Certified check if it's drawn on a bank account.
On a bank account, okay.
Yes. Or
Wire transfer from a bank as well.
absolutely. We just need to be able to source it.
Correct.
The key there is knowing where the money came from.
All right.
That's it.
So that's the big. So what we're talking about is what you need to think about for out of pocket. So you're going to be thinking about home inspection, out of pocket. That's part of your. Now, do you factor that into your 3% typically?
No.
No. All right.
No,
So
that's
we're talking,
separate. And let me speak to that. real
absolutely.
quick. A lot of times, if you're buying a resale, your client's buying a resale. A lot of times, I'll have you ask me, "Hey Blair, can we hold off until you order an appraisal or things like that?" The answer is yes. And if you think that they may find something, or you have a buyer that is really wanting no problems with a home, or you have a bank-owned property that's being inspected that the bank may or may not fix anything that is found, just tell me. And you know that we hold off to prevent incurring expenses for the purchaser until they're satisfied with whatever is found.
Because an appraisal is typically between $450 and $600.
That's exactly right.
So and that's something that's out of pocket too, which was something that changed in the recession as well, right? They didn't hold that till closing anymore.
Well, no, we hold it to closing, but certainly they have to fill out a form in the disclosures to where they provide a credit card, things like that. So,
Right.
But the most important thing is we don't want them to incur any expense unless they've gone through that. And certainly not unnecessarily. That's well said.
Excellent. So you've got the home inspection, which can range. It depends on the size of the home, the age of the home, like we talked about. You have the earnest money, that's going to go towards your closing costs or any costs at the closing table. Then you're also going to have the appraisal, which can go to the closing costs, of course.
Absolutely.
There are mortgage companies out there. That is something very specific to ask, because there are mortgage companies that do, or banks that require to pay it up front off your credit card before you get to the closing table. So that's something to think about, Guild.
Absolutely. It's a big deal.
Absolutely, because that can be $450 to $600 on top of the $300 to. I've had larger homes with Adam that cost $1,000 plus for the home inspection because they were 5,000 plus square feet. And with that being said, these things add up to where all of a sudden you've got all this out of pocket money when you thought you were going to have minimum just because the education process wasn't there. So that's what our job is, to educate you, the buyer, so that you know what's going on in this particular facet of things. Adam, tell us something else about home inspections.
Well, like I said, it's a pretty broad spectrum when it starts looking at single-family homes, but then condos, we don't really look at a lot of the exterior components of a condo. We were just recently through some issues where there was some class action lawsuits on the structures. Well, we did our due diligence, turned the report over, and we found that there was moisture intrusion coming from the outside to the inside. Well, most of the home was covered with wallpaper, so we couldn't see issues with the moisture. Even we use infrared technology, moisture meters. We have a lot of different tools in our belt, and even at that, it came back because there was a class action suit that nobody was informed of that at that point, and I guess it had just come through knowledge to the realtors and to the buyers after they bought it. That's when the class action suit came about. So, there's a lot of different things there that, especially like oceanfront condos, we're always looking around doors and windows because we know there's constant wind, constant moisture. So there's a possibility there's always that air infiltration or moisture infiltration coming around different areas that you might not think about. But that's why you hire us.
And that's a big thing too. He said that, and that brings up an important question as well. And we'll use this to wrap up the session, but as you can tell, he mentioned the lawsuit. Litigation is something big, especially with HOAs. If you're in a non-HOA community, and I'll be the first to preach, a lot of people worry about HOAs. There are several disadvantages to HOAs and why we don't like them, whether they overstep their bounds in our opinions or things like that. But there are also several advantages to HOAs, whether it be making sure there's not a broken down car next door that's being worked on and parted out piece by piece like a legal chop shop, so to speak, or making sure the grass isn't a foot tall and making sure the homes are properly presented and painted all the time. But a disadvantage can be sometimes litigation, not legislation. Litigation can come up, like he was talking about, that we've had experience with. Myrtle Beach Golf and Yacht had some of that recently. Barefoot Resort had one where they had, on the north end in Barefoot Resort, they had some HVAC issues that were going on with the builder at the time. With things like that, that's another thing that your realtor can very easily find out. Litigation is not always a bad thing. I know litigation is a very negative, sour term in our minds. It's not something where it always is going to kill a deal. It could be something as simple as there was a little thing wrong, so everyone decided we're going to go ahead and sue. That's not going to hold up a deal necessarily, but litigation can tie up a deal for a long time as well and can make it complicated down the road. So you always want to ask your realtor, if you were looking at a community with HOAs, is it litigation? With that said,
we asked that question. If they're getting financing,
excellent.
and that's a big question, because there are so many condos, and if there is pending litigation that is structural in nature, then it doesn't qualify for Fannie Mae and Freddie Mac. They can't deliver the loan to them. They won't buy it, which is the reason you have non-mortgable condos, some local banks that have product for that.
So condos are probably more common with litigation as well. Versus
certainly, because you've got the common elements and the limited common elements within the association, and that can change from year to year, because if the condo association has been turned over to the homeowners and they have a board, that board on an annual basis can deem through voting and whatnot as to whether or not they're going to go after a previous builder, and if they do, then that can stop lending until a resolution has been agreed upon by the parties. So it can be a big deal, And what we do a lot of times is always ask you to please ask the HOA company if there is pending litigation. And what I do for our clients a lot of times is we'll go ahead and take a look at the condo before we get started, kind of the same way with the home inspection, because we want to make sure that nobody wants to waste time, right? And so you want to make sure that at the end of the day, everybody is happy and closing on exactly what they want to buy. That's a great thing. That's when everybody wins.
Awesome.
Yeah, from HOAs, they're not all the same.
They're definitely not all the
and
same.
restrictions are always different depending on who drafted it in the beginning.
Read your master deeds.
Yes.
Yeah. That's a very lengthy document we'll get to next time. But as you can tell, the home buying process is not something that is going to be talked about just in 30 minutes. There's a lot more pieces to the puzzle than just us three in a home buying process. But reach out. This is Blair Anderson with Guild Mortgage. This is Adam Janis with Blue Nova Home Inspections. I'm John Crutch with Coldwell Banker Shakur Advantage. Thanks for watching on Home Talk with John. Can't wait to see you the next quarter 2, for the next show to see who's going to be on that one. Hope you all have a great night. If you have questions, reach out to any of us or message the page, and I can refer it out after that. Thank you all.
Thanks.